Hello everybody, it's Greg. I'm going to start with the monthly time frames. And I know it's not the end of the month, there's a few days left, but a lot of interesting things going on. And understanding what's happening in multiple time frames puts it in perspective. So going back to the low and this move up, understanding of what fueled it, right? What always fuels the markets is money, obviously, liquidity. And what happened, during these years, 18, 19, there was a consolidation there in the transports. Nothing much was happening. And they looked like they were going to break out. The S&Ps were doing well. Tech was doing well. And small caps weren't really doing much of anything. So back at that time, because the markets were in uptrends, the thought was that the transports and the small caps would play catch up with the S&Ps and the Qs. You can go back and look at the letters way back then and listen to the videos. And then, of course, the pandemic hit, and markets had this mini crash to the downside. What happened? The administration pumped in so much money, ridiculous amounts of money, that what could have fueled the markets through mini bear markets, small corrections, and so on, adding that liquidity could have put floors under it. And so when the pandemic hit, everything collapsed. And then all the money started coming in. And that fueled these monster moves up and all of that money, which kind of is counterintuitive. Things are so bad. Why are the markets screaming higher as they were? Because the money that was poured in was ridiculous. Now we're going through this tightening phase, and which means the money is being pulled out. We had this big momentum move higher, and now up at the top, the S&P's made this V top, or a little bit of a head and shoulders kind of a top. It's not too apparent on the monthly time frame, but you can see this little kind of we go down to smaller time frames, you see the head and shoulders. And so the transports went sideways for a while, and maybe they could have popped back up again, but they didn't, and they went down. And the small caps actually broke out, and then that collapsed back down again. And up here, you had the techs make that V-top and pulling back. So now we've had this pullback down to the first support, and that's why I've got these green areas here. And there was the bounce off of that low. And bounce off of the low on the transports. The Russell being more extended, multiple bars moving straight up bar after bar on the monthly time frame, created this big void. And so they stopped when other markets stopped and then continued lower. They didn't get down to this level yet because these markets reached their respective levels, and that put a floor under the small caps at that time. So now we had this attempt to move up, and that resulted in this next continuation pattern. Right, monthly time frame, topping tail bar. Right, this bar is not done yet, but the month is well underway, a few days left, and we've got this next continuation pattern, which suggests a move lower. So the prior low right there, the transports have already broken that. So can they stop right here, right, at that little shelf there? Based on this pattern, historical patterns, it might be a short-term stall point. But ultimately, unless it has a monster reversal back up again, no, it's going to go lower. Now, of course, we have to see how that sets up, whether it goes sideways here, and what we'll do is we'll monitor that from smaller time frames. From this higher time frame, what we do, what we call our factory work, is when we have a wide range bar like this in a continuation pattern, we just kind of eyeball about the 50% area. This isn't quite a large or wide range bar because these bars are bigger than this. So it's about an average size bar, and the same thing here and here. So the transports are the one that's taken the real beating, in part because of Federal Express, that 20% gap down, but there's plenty of other transportation stocks that are going lower, which is supportive of the recession is going to be deeper than what the pundits are saying. Right? Because these stocks move goods and services, and that's going to slow down, and in anticipation of that, those stocks are being sold. Again, we'll just see how it all plays out. So now we've got these bearish continuation patterns on the monthly time frame, which suggest lower prices. Again, now you might say, as anyone would looking at these charts, well, this area here, what about, this low right now? Well, we've got a continuation pattern, and this is trending lower. The assumption is that this low gets broken. Now, greater than 100% retracement, that sets up a counter trend move in a smaller time frame. Not necessarily in this time frame, meaning it would have to retrace all the way back up. What would have to happen, it would have to have a deep retracement and negate that bar. Now, nobody knows if that's going to happen. So I'm just pointing it out because we've always got a different scenario or what would have to happen to change our bias. Right now, our bias is that any retracement in a smaller time frame based on these patterns should result in moves lower. And the same here. This was already been tested here. So it's not like this whole big area is a larger area of support. It was tested once. So this is a weak reference point of support in a smaller time frame. And the same thing over here. All right, let's go down to the weekly time frame. So this is a continuation pattern, right? We have here on the monthly, right? This was a continuation pattern up here. So just continuation pattern, continuation pattern, continuation patterns then suggest a move to the next reference point. So in the S&Ps, we'd say down here at 320, down in this low. Now it's an area. I mean, it could stop anywhere in here for whatever reason, but continuation pattern. Where is this going to stop? There's nothing here. There's nothing here because this went straight up. It doesn't mean it has to come down here because we have a concept in MTS called creating support, and creating support where there is none. And that starts with the explanation of pivots, where this says pivot low and pivot highs, and gets into a deeper conversation of what's covered in the MTS course or the swing trading course. All right, so let's go to the weekly time frame, and we have more continuation patterns, right? Smaller continuation patterns within larger continuation patterns. So here was the move down. This was the move off of the July low. And now, let's just get our little drawing thing out here. We've got this little continuation pattern that formed. And I spoke about this when that green bar formed. And I said, because of the market environment, first of all, I'm not disrespecting the green bar, but there is the possibility that this could become a measured move and a green bar ignored. That's what happened. So as the news came out, it popped up and back down again. And now here we're heading back down toward the lows, which sets up the greater than 100% retracement concept within this time frame. So it went up and now it came back down. So when it takes out this low, which we'd assume it will, I think it was a closing low on the daily chart intraday, and then it came back up on Friday, not to be a closing low. But what we would look for is this to break the low and then some stabilization, setting up a counter trend rally. In any event, longer term, the charts say it's going to go lower. And so our job as active investors and traders to see what opportunities there are in smaller time frames to take advantage of that within the context of this bigger picture. So we've got these continuation patterns in all time frames where the weekly reversal was negated. And of course, that created a violent move to the downside. Now, we could talk about the news, but technically, that buy setup we know was institutions stepping in to buy. And technically, why did they buy? It came down there to this support area. Well, the transports didn't, but everything else stabilized, so that stabilized. And tech, the Qs, stabilized at that support area, and so on. And then when this fails, all those buys turn into sells and drive it lower. And now anybody that wants to buy is going to say this is going to be the safe area to buy when it comes down here. That's the prior support. Most of the time it takes out the low, and then you get a counter trend move. Well, counter trend move to where? Well, the upside, the way this is formed, is likely to be limited because these congestion areas are right up above. You've got 3 weeks of overlapping bars and then the break. It's not as if it was going like this and came all the way back down. Nothing on the way down, meaning no congestion in the middle of the way down. It ran up, all the way back down, greater than 100% retracement. And so that could set up a pretty big move. Whereas here, it takes out the low. You still got a lot of institutions and traders that were caught in this pattern here, and they're going to want to sell. And with the monthly time frames looking like they are, they may want to sell more aggressively rather than think, well, if it gets up here and I can get my money back. They possibly, their uncertainty has been so elevated that they're going to sell more quickly, or what sometimes happens in a more bearish situation is it just goes sideways after the greater than 100% retracement and then it starts moving back down again. And the monthly charts support that. Of course, as always, we have to see how it all plays out. So let's go down to the daily time frame. And here we have measured moves and continuation patterns. And let me just point out wide range bar. The wide range bars are getting a little smaller. So to some degree, the momentum to the downside is slowing. Now, this is a kind of a advanced observation of looking at the size of wide range bars versus when we talk about candle bodies that are getting smaller and momentum is slowing to the downside. And of course, that typically happens as it nears some support, where buyers begin to think, oh, this is a decent place to step up. Now, we've got this initial move down, strong momentum, and it bounces. And so here, the momentum slows a bit. And then we got the next continuation pattern. That failed. And it was the Fed announcement, and now it's lower. So here's a move. This is a little stall within the move, and that's just, the whole move. So the momentum picked up again to the downside. So when we start thinking about bottoms, and some might be thinking, oh, it's retesting this low, it's in a bottom. Well, okay, it's in an area of prior support. Can it now start to build support? That's going to take time. So to think that this is a great buying opportunity right here, I don't see it that way, because stronger buying opportunities come with retest patterns, meaning something like this, where it comes down and it retests. It takes a little bit more time to build an area of support to start a more meaningful advance from. And going back to those monthly charts, they suggest things are going to go lower. And so what may play out here, and I'm giving you my thoughts, we'll see how it actually plays out, is that as we're coming into the end of the month, it does take out those lows. Maybe we get some kind of counter trend rally, and then maybe October plays out to be the nasty month that it historically is. We haven't had any really nasty Octobers in a long time, so maybe it's due. Those are my thoughts, and what's happening here in multiple time frames. So as we go into this week, ideally, the markets go down and break those prior lows. They begin to stabilize. It should set up some good opportunities for credit spreads. So maybe some intraday long trades, with just being potentially a V type of a bottom. Some of them you might say, what's a V type of bottom? Meaning maybe we're just going to get one bar here. And so that may have something that sets up a 2-day move up. Remember, I said the resistance is pretty close by and sellers may be more aggressive. So in any event, any move up, unless it's a big retracement, we're looking for the next sell setup for the next move lower that's aligned with the monthly and weekly time frames. So it's a time to be nimble. It's a time not to be thinking too aggressively on the long side. And so I hope this helps prepare you for potentially what's coming, and this lesson on understanding multiple time frames, because it gets involved in understanding these and how to put them all together, and ultimately the timing where you can take advantage of smaller time frames within the bigger picture of a higher time frame. Now, at some point, this whole thing, which may take months and months to evolve into where the shift begins to happen back where smaller time frames begin to build areas of support for the next bull market advance. And of course, that'll bring in our market internals and intermarket analysis. And that we'll cover as time goes on. All right, so let's take a look at our internal market gauges here. In alignment with our thought of a short-term move higher or stabilization this week, we have the breadth internal down to an extreme level seen historically that precedes a bounce. Now, ideally, you see down here, it was down at minus 200, and sentiment was down here through these lower bands, and that started the stabilization back here in July. And then, they got to an extreme together, and there was a little blip, and the support was right there, and so it was building a base. So now we don't have sentiment here. It says institutions are less concerned because they're not being as aggressive buying put options, bearish bets. Maybe if this drops down into this area at the beginning of the week, this would come down here, and all of this would be set up for some kind of a counter trend move. Again, the trend is down. And we have those continuation patterns. So going into this week, the thought is, hey, historically, there should be some kind of a counter trend move here, some kind of a bounce. We'll be looking for things that might be showing some relative strength or things that are collapsed, climactic kind of a patterns. So we have different patterns for different environments and different situations at that moment in time. All right, Volatility Index, something for you to keep an eye on yourselves as far as set an alert up here. Right, this is where it stabilized in the past, and the market made a bottom. This is the SPX, the cash, and so while we keep an eye on the Volatility Index and what was to the left, same as anything else, but it's got this inverse relationship. Here you can see it came down near these prior lows, and market topped out. And we'll also be keeping an eye on interest rates and what they're doing. So the more piece of information that we can put together, and what we'd be looking for is the VIX coming up here, and we'll take a look at the 10-year and some of the other yields where they're trending higher, where they potentially, they pop up and then they start pulling back. So the VIX coming up to a high, interest rates starting to pull back, our internals, as I showed you, and that's setting up a counter trend move where we could have a high degree of confidence of that turn, at least for a short amount of time. Because again, going back to those higher time frames, that's all it suggests is a short amount of time here to see some type of a counter trend move. And what we'll do at that time is, well, how deep is the counter trend move? If it is deep, say it comes down here 3,600 and we're up at 4,000, that's going to change the whole picture in multiple time frames. But again, that's yet to be seen. We got to get there. And that's what we'll be talking about in weeks to come to see how that all unfolds. Well, here's a Dow chart. We usually don't look at the Dow, in this video, but you can see this is already broken down over here. It's, the June lows, it's already broken down below it. So when you hear those in the media talking about, the June low being the bottom of the market, if it was, it wouldn't be all the way back down here again. Common sense. There's a lot of other things going on. Interest rates, Fed being aggressive, so on and so forth. We all know that. That's driving the markets lower, and those monthly time frames suggest they're going to continue to go lower. Unless we get some monster reversal here, and the charts don't support that yet, the assumption is short-term potential to bounce up. Well, here's your interest rates. There's the 10-year, and you can see the way that this has been trending up. So maybe this pegs 4% or gets up there, and then it has a big red bar back down. So again, giving you the scenarios, looking at intermarket analysis and market internals as to what would be a guide for this short-term reversal. All right, so keep an eye on the VIX, keep an eye on these interest rates, That's what we'll be doing and what we'll be updating on. So I'll just go through quickly these sectors because they pretty much all look the same. It doesn't look pretty, right? Last week, even utilities that have somewhat of a floor under them because of the yield that they provide, but still they got beaten up. Communications is just has been getting killed. So that broke down under this long-term support, and it's been correcting for a long time. And this was a relatively new ETF, a few years ago. And now that this is broken down under this long-term support, unless it has that big reversal, well, those kind of things are shock patterns because the charts don't support that. But I always keep it in mind because I've seen them, like red bars over here getting reversed. But this suggests going all the way down here. And those monthly charts that we looked at are in alignment with that. So it looks like more pain ahead. Short term, we get a bounce. October could be real nasty, which sets up the end of year rally. Christmas rally, as it's called. So this broke down. And again, you've got this consolidation that occurred over here. It is not the kind of move like this, followed by a straight down move like that, breaking the low, the greater than 100% retracement. And even that had a minor move up. But this minor move up is 1, 2, ended on the 3 weeks. That's what I'm talking about. Potentially 3 weeks of a bounce of bullish price action before the next leg down into October. I'm not saying it's what is. We look at the charts. They see what they suggest. We look at multiple time frames, internals, intermarket analysis. They give us a scenario. We'll see how the scenario plays out. All right, aerospace and defense, that's what we're on. Biotech, and that broke down. It was holding, looking lower until it doesn't. Home builders, again, look at interest rates. I've talked about this in prior videos. I can grab this here. You've got that inverse relationship. So these relationships aren't as lockstep as they are right now. Different things going on. That's for another conversation at that time. And metals and mining broke down. Again, interest rates going up. This sector just doesn't do well as recession, because who's going to buy? What are they going to use copper for, and aluminum and steel, if the economy is slowing down? Pharmaceuticals, that broke down. It was kind of going sideways here. It was a deep retracement. Maybe it could have popped up. Retailing, that broke down. It's on this support. When you got this continuation pattern, these overlapping bars, it just doesn't make sense for anything more than some stabilization based on what I already covered. Semiconductors, the story there. Interest rates, shortages, and so on. Continuation pattern, and that looks like it's just got to go down there and hit those lows, or maybe a bit lower, greater than 100% retracement down there, and then we see if it starts to rebuild. Software, down at support, same consolidation. It's interesting for me seeing that so many patterns are so alike, because there are other times where they're not. So markets do change. Telecom, it took out the highs here. It was a deep retracement into that pivot high, and it's collapsed. Consumer, discretionary, same pattern. A little bit of relative strength there, since it's not quite down at the low as many others are already, or some are actually below the low. And again, I find so many charts interesting because I love doing this, but this consumer staples, look at this Head and Shoulders top. Now, these are things that we need regardless, right? You need to eat, and a more morbid thing, funeral homes, things that just don't stop, death taxes, right? And so on. But you've got this Head and Shoulders top here. It's right on this neckline. And I've seen these reverse and turn around, but the way this looks, Again, it looks like it's got to come down here. So things just don't look pleasant no matter where you look. And even energy gave it up. Now, this is the one sector that is still up on the year. Oh, it's up quite well on the year. I think last I looked, about 27%. But now even institutions are selling this, and you can see this topping pattern that's occurring here. So they're raising cash, which makes a whole lot of sense because as the markets go down, they're going to need that cash to put it back to work. So they're selling their winners, which they don't like to do, or parts of them. Financials, that broke down. I've heard a lot of these commentators or money managers talking about financials. That'll be a place to be. It certainly doesn't look like a place to be to me. And healthcare, same story. Big topping pattern. It looks like it's going to collapse, but it had this big reversal, and we were looking for this to break out above these highs here, and it just didn't do it. So one of the things that we say, which you say, well, that's common sense, but people tend to look at things through the eyes of indicators. But one of our comments is that it went down because it didn't go up. Well, what does that mean? It means that the pattern suggested it was going to go up, and when that didn't work out, that demand turned into supply and drove it lower. Right? Industrials, recession, they're not going to do good. And same break to the downside. Materials breaking down through the lows already. So you just got to take your horizontal line and take it down to the next low. And again, we looked at all those monthly charts. Technology, on some support, and it just looks like it's going to have to go down to the next level of support. Down here, you've got internet. Same story no matter where we look. Solar, which has been holding up really well until last week. It took out these highs. It was going sideways. But look, everything was getting sold. That's what I call a victim of the markets. Institutions just selling. Gold breaking down. Miners, breaking down, should go lower. TBT is interest rates. And you can see, yes, they are extended short term. And this little area up here is right where they're in, this little congestion area. So breaking above here, remember what I said before about interest rates, and we can look at the 10-year because that's what is quoted. Right, 10-year. And let's put it on a monthly time frame. You see all of this congestion up here, up around 4%. And this continuation pattern up. So, again, looking for a bigger picture turn. Well, the bigger picture, the monthly charts. This moving above 2 or above 4% up into this area up here should set up some type of a reversal. Just being extended, pushes up through or into this resistance up there. Things just too far ahead of themselves. Remember our internals and everything else we looked at, where we get this counter trend move. I'm not even going to look at marijuana because that looks like it's going to zero. They'll probably have to do a reverse split on that. Bitcoin is on the edge of the cliff here. Let's go back to the weekly time frame, and you can see this little move started to the downside and this other continuation pattern that now formed. And so if interest rates are going to be going up there, the 10-year up to 4% or higher, and this is likely going down, could be down at 12,000, and that's going to bring a lot of pain to a lot of these Bitcoin people that thought here it was going to 100,000. I have friends that were buying at 40,000, and I can hear the screams, and sounds like they're going to get louder, based on what's happening here. Last thing I'm going to look at is crude oil, because that is now breaking down. This is a continuous contract, and this just doesn't seem feasible that this is going to stop going down until it gets somewhere down in this area. So all of these relationships pointing to, yes, there is a recession. Is it going to get worse? Yes. That's what the charts are saying, regardless of what they're saying in the media. And look, if things, what could turn things around? Well, you've got oil dropping like this, and the 10-year going up like that, and maybe these markets really putting a hurt on the economy like that, where the Fed does begin to change its opinion about being more aggressive. So the markets, just like they always do, they get ahead of the Fed because they see what's coming, and the Fed is always looking in the rearview mirror. So, like, if oil is at $70 and transports are getting destroyed, right? So this is the ETF for the transports, and that's going down like that. We have to hope that the Fed would be saying, you know what, the market has done its job for us. So we'll just have to see how that plays out. As always, if you have any questions, email myself, Greg at Master Trader, or Dan at Master Trader.